Donald Trump's recent executive decisions have sent shockwaves across the globe. Some investors are jittery, others are in wait-and-watch mode, while still more are sitting back and looking for the next best opportunity to park their money. Trump coming to power has brought in a whole lot of changes. Whether it's imposing tariffs, scrapping DEI, coming down heavily on immigration, you name it. And it hasn't even been a month since he took charge. In our episode on Thursday, we spoke about how Trump's tariff policies have impacted Indian markets. Today, we got down to speaking with an international expert to bring in the global angle to understand how he sees India and other emerging economies faring in the Trump era. Today on The Morning Brief, we have a very special guest, David S. Waddle, who is the CEO and Chief Investment Strategist at Waddle & Associates. He chairs the Waddle & Associates Investment Committee and, pulling from over 20 years of experience, combines macroeconomic forecasting, macro market analysis, and macro risk assessments to design portfolio strategies for clients utilizing public market securities worldwide. We get him to talk about the uncertainty in the global markets, Trump's tariff wars and its impact on emerging markets, the potential for productivity with AI, why he derives comfort from some economic indicators, and most importantly, why he is bullish on the Indian economy. It's Friday, February 14th. I'm your host, Diya Rekhi, and you are listening to The Morning Brief from The Economic Times. Welcome to The Morning Brief. It's a pleasure to have you. It was lovely to meet you in India when you were visiting, and I'm glad we managed to make this happen. I wanted to start off with, something that was often said when I was covering markets, which is that markets don't like uncertainty, right? And would you say that we're living in very uncertain times?
I would say that politically, we're living in very uncertain times. The world is going through transition from mass globalization to sort of deglobalization or regionalization, and that's changed a set of national priorities, and it's changed the kind of elected officials that are now taking responsibility for running these countries and to a certain extent, these economies. And, the U.S. is 26% of the global economy, and Trump can be a bit erratic, and certainly if you're onshore, he's difficult to understand. If you're offshore, he's probably impossible to understand. And so I would say politically, there's a lot of uncertainty. However, I would also say economically, there's sort of record certainty. In fact, the IMF this year predicts that the fewest percentage of countries ever will be in recession. And that's the same for next year as well. So I think economic underpinnings of the global economy are very comforting, while the political overpinnings, if that's a word, are very discomforting. So I think it's a little bit of a balancing act between what you place emphasis on, either politics or economics. And so politics, uncertain, economics, a little bit more certain.
Do you think a lot of this uncertainty is due to Donald Trump taking over, or has there been this undercurrent for a while now?
Well, I think the undercurrent is what elected Donald Trump. I think conflicts worldwide are at the highest level, military conflicts, the highest level they've been in 80 years. So I think the whole world's just gotten a little bit more bellicose and a little less tolerant of immigration, and we've just become somewhat balkanized and more nationalistic. So I think that has occurred, and I think that is what helped facilitate the rise of a Donald Trump, is a distrust for the globalization, a distrust for sort of the global elite system. And so I think he's more a symptom rather than the disease. But if you look at what his priorities are, it's support economic growth through less regulation, lower taxes. It's secure the border and basically try and put an America First agenda out on the world stage. So he's broadcasted very clearly what his intentions are. It's just on a daily basis, his negotiating style seems very uncertain, very erratic, and causes a lot of anxiety. But if you look further out, at least for investors with capital in the US, it's pretty investor friendly.
So, David, we're going through this massive transformational phase, right? So, what are the changes that you see as positive, and which are the ones that make you nervous?
I think we are in the midst of a technological transformation, and utilization of that technology is going to support growth and productivity. So I'm not that nervous. When it comes to the market, I'm a little bit more nervous. And today's a classic example of why. So the S&P 500, at least in the US, is trading at 22 times earnings, which is a level that we've rarely seen over the last 25 years. And that's because there is this point you reach with valuations and interest rates where they're basically at parity, and they're kind of there. And as interest rates tick higher, those valuations get challenged. And, that creates vulnerability. So I'm a little bit more optimistic on the economy right now than I am, at least on the large cap US equity indices. I think there are opportunities elsewhere. And you can see that even within the Indian market as people have gotten concerned about Trump and tariff policies, et cetera. I think your currency has fallen 5% or something since inauguration or since election day. So I think there's more uncertainty in the markets, and I'm less comfortable with that than there is in the economies.
Since you've segued to India, why don't you talk a little bit more about emerging economies as a whole and how you see the goings-on in the US impacting them?
I think it depends on which emerging economy you're talking about. I think the bigger issue for the emerging economies is they're most vulnerable to the tariff war. So I think the most interesting measure and metric of Trump's policies will be in the currency markets, right? But the way the emerging markets manage the tariff impact is they devalue their currency. And in doing that, if you're importing goods, then those goods get more expensive. So it's a challenging negotiating position, I think, to be in if you're an emerging market. Now, for India, the U.S. loves India. I mean, the good news is, y'all got a little cozy with Russia. We're not so sure how we feel about that on energy stuff. So you're going to have to buy more guns from us and more oil. But I think Modi is meeting with Trump this week, probably to negotiate something like that. So I think India has a better position than a lot of the other emerging economies because it's a very important strategic partner for the United States of America. So I think you've got more negotiating power with Trump and the U.S. than a lot of the other emerging markets right now. And that's good for India and bad for those other emerging markets.
Sure. And this is an interesting point because we haven't seen tariffs really being imposed on India so far. Now, that's the key thing, right? It can change today. But when we speak of these tariffs, are we going to see, for instance, companies that were looking to sort of have negotiations with China moving towards India because of the tariff aspect, or is that a bit of a stretch?
No, I think you're absolutely right. So China is 45% of global manufacturing output. Right. The Indian economy traditionally has been more services centric, but obviously the manufacturing sector has grown. I think that Trump would use tariffs with India more as negotiating tools, maybe to sell more guns, more oil. Trump's tariffs with China are the real deal. Like, he wants to put tariffs on China. China and the U.S. politically obviously are at odds. So I don't think that's a negotiating tool with China as much as it's a negotiating tool with India. So I think India can buy its way out of the tariff threat. I don't think China can. I think China is pretty vulnerable here. And there were plenty of people that manufactured stuff in Russia too. Now Russia is completely offline, right? And China is being quarantined to a certain extent. And so where is the natural recipient of that manufacturing capacity? And I think it's India.
Right. Let's talk about AI now, David. Does it worry you at all, especially in terms of its impact on jobs?
Well, I saw an economist that I have a great deal of respect for, 5 years, forecast the demise of the U.S. economy because we're running out of workers. If you combine AI with dexterous robotics, then in theory, you have virtual workers. And if the economy is nothing more than the number of workers times how productive they are, that's what GDP is. And you have sort of limitless worker creation and you've got, continuous productivity growth, then the sky's the limit. So I think it's rather Malthusian to say, AI is going to disrupt us and perhaps displace some workers. While there's truth to that, we're short on workers. We need more workers. So the unemployment rate in the US right now is 4%, and AI is clipping away at jobs. Zuckerberg's laying off another 5,000 people, et cetera, and yet we find ways to absorb them. So I think it's important, and this is the economist in my head always telling me, David, do not be Malthusian. I am not worried about AI displacing workers and creating some sort of crisis. I think what happens is that AI boosts productivity like it did in the 60s, like it did in the 90s, and the economy restructures around that for the better. And I think, overall standards of living go up, not down because of AI.
Sure. Shifting gears a little bit, David, and bringing you back to India, I wanted to understand a little bit more about, when we spoke about you coming here, for instance, right? You were coming here with a company that was sort of expanding operations in a sense. But I'm asking you if you're seeing a lot more interest from American companies to really invest in India, and even possibly more interest from investors to invest in the Indian market. Is that something you're seeing?
The answer is yes. India is an investment, right? And China, going back 15, 20 years was clearly an investment. And that's the way people are talking about India. Now, you'll see capital flows in and out of the markets. It tends to be a little bit of a hot market and certainly has been up until, I guess, the last few months. But the investment in India is long-term investment. From a capital investment standpoint, the discussions I have with investment bankers is that India is open for business. India now has the largest population. You've got per capita GDP less than 3,000. There's an enormous amount of promise. It's obviously the strategic partner for the U.S. in that region of the world, specifically as people withdraw from China. So yes, there are believers, right? You got to fix your infrastructure. You got to fix your regulatory morass, get rid of some bureaucracy, but that's all part of the development process, I certainly hope. But yes, the intentionality around investing in India is legitimate.
Sure. And I mean, I'd love for you to elaborate a little bit more about the pain points that you're hearing. If you have anything further to add about exactly like maybe instances that you have experienced or even like what you hear from other companies, what exactly is stopping people from investing in India, like apart from the three that you mentioned, but if you can go into that in more detail.
Well, China runs like a company, right? And Xi is the CEO. And so if Xi wants to build a road, it's done within a month, right? I mean, so the national priorities and the speed with which things get done in China is astounding. India, you're a democracy. And democracies make things a little bit harder. You don't run as efficiently and can't accomplish the same things with the same velocity that China was able to accomplish. And so they're just further along in terms of, employee development and manufacturing capability and infrastructure, et cetera. And without all of these, I was in China, I guess, when the U.S. made the comment that our policy towards China was going to be containment. And I remember the Chinese being like, I don't understand this at all. I thought we were trade partners. Like, what's happening here? And so that whole relationship shifted. Had it not, who knows where China would be today? I mean, maybe it'd be 70% of global manufacturing. Who knows? But our policy towards them continues to be that of containment. Our policy towards India is we'll help you grow. It is not containment. And so I think it's just the bureaucratic morass of democracy that slows it down. But even after I left you at that meeting, I mean, it took us forever to get down the road, to get to the airplane, to fly on to the next town. It's just a challenge. And so in theory, you look at the textbooks and you're like, well, all the pieces are there. But once you're on the ground and you're commuting around, you realize there are a lot of frictions, and those frictions have to clear. The bottlenecks in India have to clear. The political will has to be there from the people, and then the leaders have to drive that.
But do you think Trump's executive decisions and this whole America First stance will slow down investments, including into economies like India?
I mean, I think people are pausing in general. The Federal Reserve is pausing. I mean, they had Powell on Capitol Hill yesterday, and they said, what'd you think? I don't know, right? So until we get some clarity on his agenda, if you go back to 2017, when he started saber rattling about tariffs, the S&P 500 went sideways until he clarified those positions. So, I mean, I'm not really going to move major investment dollars around until there's a little bit more clarity on the agenda. We haven't seen the reconciliation bill. I mean, the guy's only been in office for, a month. So it's still pretty early to be making massive billion-dollar infrastructure decisions, but I do think the writing is on the wall. And so, maybe you have these plans drawn up and you don't push go until you see actual legislation. But in the conversations I'm having, whether it's India, whether it's the U.S., whether it's Vietnam, wherever, it's certainly less China and more everybody else.
Sure. When we talk about, services, right? India has been traditionally a very service-oriented economy, right? We've had a lot of very good tech talent. American companies are full of a lot of Indian talent, right? This whole immigration thing, I'm not necessarily asking you about your thoughts on the immigration aspect, but more on the economic impact, if any, on this entire immigration issue. Could it impact American companies finally at the end of the day?
So I think the immigration issue in the U.S. is a complicated one. But if you look at my economic models for the year, let's say that you've got, Trump has talked about 1 million deportations. Now, those aren't tech entrepreneurs that Trump's deporting, right? These are people, I guess, that have criminal records, et cetera. I don't know. It's murky. But shrinking the labor force is not necessarily good. And we've had a massive growth in the labor force because we've had massive immigration, which I think Biden sort of did by design to try and get wage inflation down. So let's say that deportations or the closure of the border do end up draining, call it 0.1% from GDP because the labor pool is shrinking. That's not good. And if you look at tariffs, and I modeled out sort of a 10% overall tariff rate for the US, and we're at 2%-ish right now, that's a pretty sizable increase. Maybe that deducts 0.4% from GDP. So I've now sucked GDP down by 0.5% because of deportations and the impact of tariffs. If productivity is growing at 2.5%, then the U.S. economy is still growing at 2%. And the long-term expected growth rate for our economy is 1.9%. So it's still growing above trend. So I think because the productivity is so high, the U.S. can absorb, a loss of some of the size of that labor pool. But, as to, I hear more anecdotal things about people having challenges at the border right now than I see policy proclamations on. I mean, there's a lot of stuff that's happening that, the news is breathless right here in the U.S. Poor reporters like you are getting no sleep and it's hard to keep up. But I think those frictions at the border are a pain point. But right now, they're just trying to get their hands around everything. And then they can start, I think, a more measured approach to the flow in and out of the United States of America. But the agenda for the Donald Trump campaign and for the administration requires that productivity growth. It is a productivity bailout for the other parts of his agenda, which are downforce. And, Elon Musk is in his ear. So what may be sort of a restrictive environment today may not prove to be 6 months from now.
Finally, David, one piece of advice you have for Indian policymakers.
Well, I think the unfortunate thing is that y'all haven't already answered that question, right? So there needs to be a strategic plan. There needs to be a CEO, like the things that you can learn from China. There's no reason that the Indian economy, with all the talent you have and all the energy you have, can't be a diversified economy, right? It can be a consumption economy. It can be a manufacturing economy. It can be a services economy. I think the low-hanging fruit right now is in manufacturing because of the policy array out there. So to me, I would use the opportunity of bolstering the manufacturing economy while it's so present, and the U.S. would be so grateful for that and supportive of that. But I wouldn't ignore, of course, the services side of the economy. But the ultimate goal really is to get that per capita GDP rate up. It's been going up substantially over the last 25 years, and maintaining that curve is the goal. And that's the flywheel that will grow the economy.
David is spot on. India has a huge opportunity if we play our cards right. But this is provided we get our act together when it comes to things like infrastructure, regulation, and bureaucracy. Global companies are going to look to diversify away from China, and India should capitalize on that. The government taking initiatives to boost the electronics manufacturing ecosystem, for instance, are all positives. Like David said, manufacturing at this point is the low-hanging fruit that we should not be lazy to pluck. Also, China has paved the way for other emerging economies to see that something like DeepSeek can be created without billions and crazy compute. It requires innovation, political will, and capital. India needs to focus on all three because talent isn't the problem. Thank you, David. It's Friday, February 14th. I'm your host, Diya Rekhi, and you were listening to The Morning Brief from The Economic Times. This episode was produced by Surohini Jain and sound designed by Indranil Bhattacharjee. Do share and subscribe if you enjoyed this episode. The Morning Brief drops every Tuesday, Thursday, and Friday on a listening platform of your choice. Thank you and have a good weekend.